Hello and welcome back, everyone. This edition, I wanted to initially analyze some of the IPOs that are coming out. Although I'm not a believer of investing in IPOs, and I believe that most of the people who underwrite those IPOs have a responsibility of blowing the trumpet and really increasing the valuation so that they make fat commissions on it. And I like picking stocks when they have been listed and they have been listed for some time, and then the valuations seems a little out of touch. So I started looking at the IPOs, but really all are very smallish IPOs which are open currently in the range of 30 to 35 CR issue that they want. And hence I then stumbled upon PN Gadgil, which IPO has already opened, and there was a huge hue and cry about PN Gadgil, and I'm seeing a lot of retail investor sentiment towards selecting IPOs for the great returns that they're making. And in fact, earlier, what used to happen was if 10 IPOs were listed, five would make money and five would not make money, and it really was a lottery. But now I'm observing that most of the IPOs are making money, and a lot of euphoria and froth is there around IPO because recently Hero Honda showroom also came into an IPO, which just is one showroom, had close to 8 to 10 employees, and that IPO was oversubscribed multiple number of times. But this time, I'm looking at something which has already debuted on the markets. So PN Gadgil Jewellers, and basically I have been holding interest in Kalyan Jewellers, and I've been holding it since it was at a price of 240. And my philosophy of really holding it was that I was looking at Kalyan and Titan, and at that point, the market wasn't really flooded with a lot of retail, with a lot of organized jewelers. And Kalyan at that time was trading at a PE multiple of close to 42. Although it was much smaller in terms of revenue compared to Titan. But I really felt that Titan's 90 PE in terms of where it stood at that point in time was unjustified. And I felt that choosing the second player, and I had gone through a lot of the founders' presentation, and I, in fact, also did some shopping from the Kalyan Jewellers showroom, and I was really impressed with the rates that they had and the making charges, which were much lower than what Titan had. And I really felt that there was a differentiation at that point in time, and I decided to pick it up. In hindsight, it was a great decision. But so the objective of this video really is to not only analyze it for my self-interest as to whether Kalyan is still holdable, but also look at some of its peers which have been listed now. Earlier, PN Gadgil and Senco. Senco was much smaller. So Senco is more concentrated in the east of India, its stronghold being the West Bengal, and now it's venturing out into India, similar to what Kalyan's story was. So Kalyan really started as a first store in Thrissur in Kerala, and really it expanded from there. So Kalyan's expansion has been really aggressive in the sense that whoever is the largest star, like the biggest star from that region, they hire them. So, for example, for selling to North India, they've hired Amitabh Bachchan, and for South, so they've hired some of the biggest stars from South. For Punjab and everything, I think the upcoming star like Vamika Gabbi they had hired as a brand ambassador. So they were in a very expansionary mode, and their store sizes are huge. And also they have a lot of collection in terms of the kind of jewelry that they have. The one threat looming over the entire jewelry industry is definitely the lab grown diamond. But from the if you really speak to a lot of jewelers, they say that the lab grown diamond has been uh, marked as really a real diamond and being sold since a very long time. We'll never know that unless some really stringent regulations do come in, and really trust factor becomes a huge role in the jewelry industry. So here, if you look at the comparison between four uh, jewelers which are listed, so Titan Company, obviously the largest with a market cap of close to 3,37,000 crore. It has a PE of close to 97.6. Kalyan Jewellers has really skyrocketed to 120 PE. HSBC came up with a favorable view on Kalyan, then said that although the price is at 730, it sees a further upside on Kalyan Jewellers, moving towards 800 and breaking that threshold. So we'll have to wait and watch. I think the last quarter had been muted because in terms of people purchasing jewelry is not the auspicious time. But as we approach towards Diwali and Dhanteras and those kind of things, I myself got a call from the Kalyan store where I bought the jewelry that the price can be locked in for Dhanteras. So they have been calling people who have already purchased from the store. Not a good sign. I don't like people trying to seem desperate to sell. It's such an item that um, people should trust and people should go in and buy on their own rather than them selling it out. But yeah, let's see how it performs. And I think PN Gadgil and Senco is a very interesting case study because the market cap is quite similar for both of them. In terms of the price, though the Senco Gold's price is sitting at 1300, whereas PN Gadgil is sitting at 731. Kalyan is sitting at a similar price of 730 in terms of price to earnings, but Senco is the lowest, and PN Gadgil is sitting is close to 64.3. Kalyan is the highest at 120, and Titan is sitting close to 97.6. And if you look at in terms of the book value, right? So Senco Gold is sitting at 177 with a price of 1285. So all the price to book multiples are quite high for these jewelry companies. These are hardly any dividend paying stock in this because they're continuously expanding, and the expansionary mode is such that competition is really coming in terms of organized jewelers. A brief overview about what the market was earlier and how it is moving to organized jewelry. Earlier, people used to always trust their family jewelers, and they would always go to the family jeweler to purchase any form of jewelry and trust them with what they were giving, the rates that they were giving. But now people have started going into the more posh these Titan outlets or Carrot Lane and those kind of outlets to purchase the jewelry requirements. And it is stated that 80% of the jewelry market in India currently is still sitting at unorganized, and 20% is organized. And this number is going to keep getting pushed up to 30 to 40% in the coming decade. So seeing this, I think a lot of companies are launching their own jewelry company as well. So for example, Aditya Birla really came out with its own brand. I cannot recall at the top of my head, but they did come up with their own brand and they are looking to expand quite aggressively. In terms of the capital optimization ratio, so here if you see return on capital employed and return on equity being the highest for PN Gadgil and even for Titan, Tanishq being the crown jewel of Titan, even with a higher base and the capital that they're deploying, they're able to generate good capital ROC and ROE numbers. Kalyan Jeweller and Senco Gold lacking on that aspect and sitting quite similar in terms of where they are at. In terms of the profit after tax, what each company is making, obviously Titan would be the highest in terms of the profit that they're making at close to 3,500 crore. And Kalyan would come in second, 630, but a huge gap between what Titan is making and what Kalyan is making. Kalyan is also expanding into further geographies. It's expanding into UAE and the US and the likes. Let's see how it works out for them. I think UAE is working out quite well for them in terms of the numbers that they are putting out. And for Senco, still quite a regional player in terms of Senco concentrated towards the east and PN Gadgil concentrated towards the west. PN Gadgil is a Maharashtra grown jewelry company, and I'm sure it has ambitious plans or to move into the national front. But I'm not aware about the strategies that they have in terms of whether they want to move into the national front or want to concentrate on the state that they have and do it well. In terms of the promoter holding, right? So I think all above 50%. PN Gadgil is highly concentrated towards the promoter because also at a very smaller base. And Titan at a very large basis, has 52 to 53% of the promoter holding. Obviously, since no dividend, there's no dividend yield as well. A very good sign is that there is no pledged percentage. So I really don't like seeing shares which have pledged percentage in it. That shows to some degree. I wouldn't say that is a straight cut judgment saying that if it is pledged, it is a no go within a stock. But if the promoters are not financially prudent as to managing the finances, and they are pledging their own shares to expand, usually it's a red flag for me, and then the case is then shut, and then I do not like to proceed after that. um, yeah. So in terms of the cash that the book that each of the jewelers have at the end of preceding year, Titan is a huge chest, and we have seen that Carrot Lane company grown out of Jaipur, and really paid huge enormous amounts to cater into the online jewelry segment as well. So they have a chest, and they are acquiring left, right, and center. Kalyan also has good amount of cash at the end of preceding year. It'll be interesting to see what the debt to equity is for each of the jewelry companies, and I believe it would be quite high because of the expansionary nature of the business. And as we can see here, I think the debt to equity, Senco Gold is sitting at 1.28, and all are sitting at 1.65. So debt to equity is calculated with debt being on the numerator and equity being on the denominator. So if the number is higher than 1, that means the company has more debt on its book than the amount of equity that it has raised. It can be good for tax purposes, but generally I do not like businesses where the debt is quite high, because I want the business to have a little bit of margin for safety. And you can think of margin of safety like a bridge which allows a truck of 10,000 kgs. So if I'm the owner of the bridge, and the truck is at 9,990 kgs, it can still go through, and it is within the permissible limit. But I would want a truck which is 6,000 kgs, so that it's at 60% of the permissible limit, so that there is a margin of safety. And I look at debt in such a manner. So yeah, that's it from my side, I think, on this edition of comparing 4 of the organized jewelry companies listed on the Indian stock market. Do subscribe to the channel, like and share. Your love keeps me going, keeps me motivated to put out more videos and add value. Thank you so much, and have a great day ahead.